Assalamu alaikum friends, welcome to day 9 of Audit and Assurance Revision Crash Course. Today we are going to cover internal audit. So in the internal audit, we are going to go through internal audit. What is internal audit? Why do we need internal audit? Comparison of internal and external audit. Outsourcing the internal audit function and reporting an internal audit report. So first let us define what is an internal audit. Internal audit is done by someone who is an employee of the company, right? It could be any service. Internal audit can give any services. Okay, he can give a consulting services, he can give an objective assurance, which are designed to add value to the company, right? Why do we need internal audit? Internal audit depends on certain circumstances. One, scale, diversity and complexity of activity. If your business is growing, right, if there is a lot of complex issues and all, you need an internal auditor. Okay, you need to look for these things. When do you need an internal audit? For example, your business is very small, you are a sole trader business, you don't need an internal audit, right? But as your business scale up, you do need an internal auditor. Number of employees, if your number of employees increases, you need an internal audit. Cost benefit considerations before you use the services of internal audit, right? Because internal audit is from your employee only. If you're Before you are using the services of internal auditor, you have to see the cost benefit. What is the cost to you for doing it? If the benefit is more, then only you'll be taking the services of internal audit. Otherwise, no. The desire, right? The senior manager might desire that they now need an assurance and advice on risk and control. Who is a better person to advise on risk and control other than the auditor, right? Internal audit. So, what do internal auditors do? Remember, the roles that internal auditor plays and the role that external auditor plays, they have some similarities, but differences are also there. Mostly we are focused on the differences. Number one, is the financial information reliable? So that they are checking whether the financial information is reliable or not. And remember, if the internal auditor, they are doing their work effectively, efficiently, it reduces the work of the external auditor if they are going to rely on the work of the internal auditor. Are systems and controls operating effectively? Internal auditor checks it. Are procedures being followed? Fraud investigations, compliance with law, value for money. So these are the few things that internal auditor does, whether it's complying with law, whether it's procedures are being followed, how the internal controls are working. Now let us go to the comparison of internal versus external audit. These are the differences. So internal audit are employees, or it could be outsourced function also. Sometimes you can outsource this service to someone another company, right? External audit are independent. That is the status of external auditor. Internal auditors are appointed by audit committee. External auditors appointed by shareholders. Internal auditor reports to audit committee. External auditor reports to shareholder. Internal auditor, they report on what? Control, value for money and IT. But external auditor gives a true and a fair view of financial statement. Remember, internal auditor cannot give a true and a fair view of financial statement. They cannot sign that auditor report giving their opinion, modified, unmodified opinion. It is the job of external audit only. Internal auditor, what will he do? He will do the other things. He will check the control, he will do value for money, he will check the IT, the internal control. Standard. Internal audit has their own standard, internal audit standards, but external auditors are the one who follows the ISAs and code of ethics. Because they're independent, they need to follow the code of ethics and the international standard, right? So to work, the internal audit department must be sufficiently resourced. Internal audit department cannot just work if they don't have the resources. They should see whether they have the resources, sufficiently resourced, well organized. They have to be organized, independent and objective. Whatever auditor it is, internal or external, the number one rule is they have to be independent and objective. Then only they can work as an auditor. But there are some limitations to this internal audit function. What are the limitations? Number one, independence, because they are employed, no? They're not outsiders. So number one is there could be a lack of independence. And number two is variations of standards. Relatively new profession. Internal audit, okay, they don't have a fixed standard like how we have external auditor, ISAs. So for internal audit, the standard varies. Now let us go to the advantages and disadvantages of outsourcing. Sometimes outsourcing means you are not performing the services in-house. You are sourcing it to someone else to do it for you. Okay. So what are the advantages and what are the disadvantages of this? Advantages are emphasizes on cost and efficiency of the function. Yes, because you are giving it to someone else who will be more experienced than you, cost reduces and they are more efficient than you. They will have a wide range of expertise which you will be lacking. They know you don't have to worry about hiring staff and the cost is passed to the provider. Okay. Earlier, if you have to do the internal audit function, what happens? You have to think about people. You have to train them. So there's a risk to that. How many staff you need? What are the staff you need? But now you don't have to worry about it. It will be done by the service provider. May improve the objectivity of the function. So it becomes more objective now. Access to new audit technologies. Yes, the one to whom you're outsourcing, they might have access to new audit technologies. Because see, outsourcings are not only doing for you, they will be doing for several companies. So definitely they'll be having some new audit technologies and all which you don't have as an individual company. Reduce management time. It allows your management team to focus on other things, other activities. Now let us go to the disadvantages. Threat to objectivity if provided by external auditor. What do you mean by that? If you're outsourcing it to the external auditor, it's a threat to objectivity, because he is doing the internal audit function, he is doing the external audit also. Potential lack of knowledge. Yes. If you're outsourcing it to someone, he will not be aware of your culture, your objective. So lack of the knowledge of this too. Cost. Sometimes what happens when you're outsourcing, they will be focusing so much on cost to reduce the cost, it will reduce the effectiveness actually. Service provider may not be as flexible as an in-house function. Yes. If see the demand. If anything happens, you can accordingly change. Service provider is not like that. They are not that much flexible. They have a fixed time. In that time, they are going to complete. Okay. And lack of control over the standard of service. You cannot control over the standard of service that they are performing. They might be performing at a lower standard. These are some internal audit assignments. Okay. What is the general approach for the internal audit assignment? Identify the key risk area. Whatever internal audit assignments you are doing, first you have to identify the key risk area in any of the audit you are doing. Are there any procedures to mitigate the risk? Once you have identified, identification comes first, then you have to see whether there are any procedures to reduce the risk or not. Are the procedures being followed? Are they following the procedure? Are the procedures effective? Report and then recommend. So report and recommend should come at the end. Okay. Now, for value for money audit, this is one example of internal audit. Internal auditors do this type of audit. Value for money, which is known as 3 E's. What do you mean by 3 E's? 3 E stands for economy. That means least cost, efficiency, best use of resources, and effectiveness. Best result, best outcome. The other two types are audit of IT and financial internal audit. Audit of IT. So in the audit of IT, these are the things internal auditor will check. Do the system provide a reliable basis for preparation of financial statements? See, when you're making financial statements, any financial statements are based on the IT system only. If the IT systems are reliable, financial statements will definitely be reliable, more accurate. Do internal controls reduce the risk of misstatement? Do you have the proper control, the ID control? Do they reduce the risk of misstatement? This will be checked by the internal auditor. Does the system represent value for money? Okay, your system, IT system should represent value for money. It should not be that the cost is so much and the benefit is very less, or it's not even giving the benefit at all. Are the controls over awarding contracts for IT installation effective? Now let us go to the financial internal audit. So for financial internal audit, the internal auditor will check, do the records and the evidence support financial and management reporting? This will be more on reporting and all, financial and management. Are there errors of fraud? Does the analysis of information identify trends and potentially significant variations from the norm? You should be able to know this through financial internal audit. It looks at the trend and it sees whether there are any variation from the norm. Now let us go to the producing of an internal audit report. So this is the last part after you checked everything. Now you have to make a report. Just because you are doing an internal audit does not mean you don't have to make a report. You have to make a report. To the audit committee, you have to submit this report. So there, this is very similar to report to management. And what does this report includes? Describe deficiencies. If there are any deficiencies, you describe it. Explain the consequences to the organization. Remember, you are an employee of the organization. So if you are not following, if there are deficiencies, if it's not corrected, what will be the consequences to the organization? Provide a recommendation for improvement. You will be recommending them. And now, from your exam kit questions, these are the questions that you have to do. For section A, sister, and for section B, we have goofy, montage. That's it. So that's it for today. Tomorrow we'll be coming with audit procedure. Till then, thank you for watching. I'll see you in the next video.